All right, hi everyone. Welcome to today's webinar brought to you by Vantage. Where today we'll be concluding our support and resistance series, looking at part two, which is basically trend lines and channels. All right, before we begin today's webinar, please take note we're streaming directly into the Vantage app as well as over Zoom, so do not hesitate to drop your questions in the relevant Q&A boxes as we progress through today's webinar. All right, before we begin, sorry, please take note of the disclaimer. The information, context, opinions which are expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. So take note of the risk warning that comes with trading margin forex and CFDs as they carry significant risks and is not suitable for all investors. My name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between Vantage and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so here's the agenda for today. So basically, it's going to be part two of support and resistance, where we'll be diving into trend lines and channels. And we'll also take a touch on breakouts and fakeouts. And we'll also see which indicators can be used to help us determine momentum and how we can improve the probability of successful breakouts as well. Now, first of all, with the basics, how do we draw the trend lines? Right now, there are two types of trend lines, right? We have ascending trend lines and descending trend lines. So basically, for ascending trend lines, this is typically seen in a strong uptrend, right? So when we have a strong uptrend, we are likely to see the price action as such as shown in this image here. So you are likely to see a series of higher lows and higher highs, right? So we can see here, each subsequent low is getting higher, while each subsequent high is also getting higher. And by high, we mean the swing high or the swing low, right? So each subsequent swing high or swing low is getting higher. And typically, this is the type of price action that we would see in a strong uptrend. Now, when we see such price action like this, we will typically be able to identify a trend line. And in this case, right, for the uptrend particularly, we will be looking to identify an ascending trend line. Now, for ascending trend lines, they are drawn from the bottom, not the top. So we're looking for the swing low. So remember, despite being an uptrend and despite the ascending trend line identifying upward movement, we are going to be looking at the lows to identify and determine the starting and subsequent points of that ascending trend line. Now, trend lines to be significant need to have at least 3 touches, right? There may be trend lines that can have just 2 touches as well, but generally they tend to be more coincidental and do not usually function as very strong support areas. So that is why when we are looking for trend lines, whether they are ascending trend lines, which is the case here, we'll be looking for at least 3 touches. In this example here, we can see 4 clear touches being made, highlighting a very significant ascending trend line or support line. So remember, ascending trend lines are basically support lines. Now, in this example here, right, we can spot a significant swing low at point number 1. There's also a swing low at point number 2. We have another significant swing low at point number 3. And of course, another significant swing low at point number 4. Now, as price action is being formed, right, swing low 1, 2, and 3, by swing low 3, there is some early indication of a potential trend line. So we can see here, right, once swing low number 3 is made, price starts to climb higher, we can start to include the ascending trend line in our analysis. But take note, at this point here, right, when swing low 3 is formed, at this point here, this trend line only has 2 touches. So it is not really a very it is potentially not a very strong support area to take note of. But as price falls towards this level here at point number 4, and should we see a bullish reversal take place, that's where we get 3 touches, right? That's where we get 3 touches. And that also enables us to try and capitalize on the bullish reversal here. Now remember, by the time we come to swing low number 4, there are only 2 touches of the ascending trend line. However, should we see price stabilize at the trend line and make a bullish reversal, it's quite likely the upward momentum is going to gain further traction, and it helps us identify a potential bullish reversal opportunity. So take note, as price makes the third reaction of the ascending trend line, that's our opportunity as well to try and play the bullish bounce or bullish reversal. Right, so similar story here, right? We have swing low number one, we have swing low number two, and we have swing low number three over here. So by the time price comes down, okay, once swing low number two is formed, we are then able to draw the ascending trend line. But take note at this point, the ascending trend line only has two touches. Now, at point number three, as price is falling towards this trend line, and we see it make a bullish reversal, right? That's the third touch. That gives us more confidence that this upcoming reversal, right, is likely to gain further traction. So that gives us an opportunity to ride the bullish bounce or bullish reversal as price bounces off the ascending trend line for the third time. So take note, as price is falling towards the ascending trend line for the third time, this is when we should be on alert, looking for potential bullish reversal. And if that reversal does indeed materialize, we can try to capitalize on the upside. Remember, we're not trying to open a long position at exactly the trend line, but we are actually looking for price to make a clear reversal or clear bounce of the trend line before opening a position. So perhaps it could, depending on the time frame that you're on, like let's just assume this is the hit 1 hour time frame. And after a couple of candles, right, at least after the second or third candle, and we see a clear bullish reversal being formed, or we see a significant swing low being formed, that gives us a little bit more confidence to open a long position, trying to capitalize on the bullish reversal. And because this is the most recent swing low, right, you would identify your stop loss at about, if this is a currency pair, right, at about 10 to 15 pips underneath the most recent swing low here. Remember, the ascending trend line is a support line, and once price makes a third bounce off this line, this is quite likely to be a pretty strong support area. And typically when we go long, we're going to be identifying the stop loss level slightly below the major support. So in this case, the major support is the swing low at point number three. And typically, if it's a currency pair, we would have a buffer of about 10 to 15 pips to determine the stop loss level. So we place the stop loss 10 to 15 pips underneath the swing low here. And as price makes the bullish reversal of the ascending trend line for the third time, we've got an opportunity to try and capitalize on the upward momentum. And of course, price returns here. In this case here, in this example, price returns to the ascending trend line for the fourth time. And this time as well, we see a nice bounce being materialized. So similarly, let's just assume we're on a H1 time frame, wait for at least one or two candles to be formed as price makes the touch or makes the reversal of the ascending trend line before trying to capitalize on this upward movement. And similarly, because this is the most recent swing low, the ascending trend line is also a support line. So similarly, we'll be identifying our stop loss 10 to 15 pips underneath the most recent swing low at point number four. Now, that was ascending trend lines, basically, which are support lines in an uptrend. Now we're going to be looking at descending trend lines, basically, which is the opposite, right? So descending trend lines are resistance lines, right? And this is usually seen in a downtrend. Now, in a typical downtrend, we will see a series of lower highs, lower lows. So that means each subsequent swing high is being getting lower and lower, right? Which is what is shown on this chart over here. Similarly, in the downtrend, typically we would see each subsequent swing low getting lower and lower. So when we see price action such as this highlights the ongoing downward momentum or bearish momentum. And typically we are going to try to identify a potential descending trend line, and descending trend lines will be drawn from the top, right? So descending trend lines are resistance lines and they will be drawn from the top, not the bottom. So basically simply the opposite of how we would draw an ascending trend line. Now, just like the ascending trend line, we want to see a trend line that has at least three significant touches. Two touches, once again, tends to be more coincidental, but once the third touch is made, that gives us a lot more conviction that the trend line, in this case, the descending trend line, is indeed a pretty strong descending trend line or pretty strong resistance line as well. Now, here we can spot a swing high resistance at point number one. We can also spot a swing high resistance at point number two. Now, after the swing high resistance at point number two is formed, we can start to draw the descending trend line. Then as price rises up towards point three, right? Remember, price starts to rise up towards point three. That's when we should be on alert, because if price does indeed stall at this trend line once again, the descending trend line once again, we've got a pretty good chance that a bearish reversal will take place. and we are likely to see the downside accelerate even further. So as price runs into resistance at the descending trend line, remember at this point there are only two touches. We don't really have a very obvious descending trend line formed just yet. But as price hits the descending trend line, makes the bearish reversal and starts to fall lower, this is where we can get a stronger conviction that we do have a bearish reversal opportunity in progress, and we're going to try to capitalize on the downside. So as price makes the bearish reversal, we go short maybe on the second or third candle. Remember, once again, let's assume this is the H1 time frame, 1 hour time frame, and as price makes the bearish reversal of the descending trend line, and we see one or two candles being formed after that and are generally moving lower, that's our clue, or that gives us more conviction that the bearish reversal has indeed taken place, and we are likely to see price fall further. So we open a short position by the third candle, right? For example, if you're on a H1 time frame, trying to capitalize on the downside. Similarly, because point number 3 is the most recent swing high resistance, and by this time we also have 3 touches for the descending trend line, which itself is a resistance line. That means, once again, if this was a currency pair, we would place the stop loss 10 to 15 pips just above this swing high resistance at point number 3, which is also accompanied by a descending trend line, right? Very similar concept to the ascending trend line, but of course, everything is flipped on its head. Then as price rises up towards the descending trend line at point number 4, once again, the bearish reversal does indeed play out. So we open a short opportunity once again. We open a short position once again. But remember, because this is the most recent swing high here, right? At point number 4, we would place our stop loss 10 to 15 pips above the swing high resistance. Because you can see very clearly as price returns to the descending trend line once again at point number 5, it breaks slightly above the descending trend line but does not break above the swing high resistance at point number 4. And because we have placed our stop loss with a buffer of 10 to 15 pips above the swing high resistance at point number 4, we can see that as price rises up beyond the descending trend line at point number 5, it does not hit our stop loss, and then it reverses and enables us to capitalize on the downfall, or allows us to capitalize on the bearish reversal, right? So once again, you can see why it's important to identify significant swing highs, which then in turn can be used to identify suitable stop loss levels. And typically, if it's a currency pair, right, we will be looking to have a buffer of at least 10 to 15 pips above that most recent significant swing high. Remember, point number 4 is a swing high resistance, which is also accompanied by a descending trend line, which by now already has 4 significant touches. Right? Of course, at point number 5, price does break slightly above the descending trend line, but it does not break above the swing high resistance at number 4. And that is why having a buffer that is as wide as 10 to 15 pips typically will help us ride through such volatility and enables us to try and capitalize on the downside without putting on too much risk. Right, now here again, right, similarly, you can see a couple of swing high resistance at point number 1, swing high resistance at point number 2, swing high resistance at point number 3, 4, 5, and 6, right? And then each time, as price hits that descending trend line and reverses to drop lower, we have an opportunity to go short on this instrument, and we can try to capitalize to the as much as possible to the downside. And because once we and to identify a suitable stop loss level, right, we are going to identify the most recent swing high, the most recent significant swing high, and along with the descending trend line itself, because the descending trend line is a resistance, a potential resistance barrier. Right, similarly here, right, we can also run a draw on descending trend line from point number 1, 2, and 3. Right, by the time price hits point number 3, descending trend line at point number 3, and makes the bearish reversal, we've got a pretty strong case to open a short position. As we've seen price make a bearish reversal and also price respect the descending trend line, which itself is a barrier. So similarly, once this swing high at point 3 is is formed, right? We can place a stop loss that is as wide as 10 to 15 pips above the swing high resistance at point number 3, which is also accompanied by a descending trend line, right? So with the stop loss, with our suitable stop loss, placed slightly above the most recent swing high resistance, which is accompanied by the descending trend line, right? We've identified a suitable stop loss without putting on too much risk, and we have an opportunity to for a short position and trying to ride the downside as much as we can. Now, there can be some instances where we see price break slightly higher and break above the descending trend line, right, which can lead to false breakouts as well. Now you can see here, we may think that as price breaks above the descending trend line, we may think there's a bullish breakout opportunity on hand, but in this case here, price breaks out not once but twice. But in both instances, you can see that price failed to continue to climb higher and in fact returned, in fact in reverse, to drop back under the original descending trend line. So be aware as well, just because we have identified a very significant descending trend line, it doesn't necessarily mean that price is always going to hit that descending trend line. There can be instances such as this, where price breaks briefly above the descending trend line, triggering a false breakout. And there are also instances where price can come very close to the descending trend line and stall just underneath it, just like this example here, and then reverse to drop lower. So remember, once a significant descending trend line or ascending trend line has been identified, it doesn't necessarily mean that price is always going to hit that level. We can see many instances where price breaks through the level and then returns back uh, underneath the descending trend line or climbs back above the ascending trend line. And there are also instances where price comes very close to the descending trend line, does not hit it, but reverses to drop lower. Similarly, for the uptrend, price drops very close to an ascending trend line, doesn't touch it, but manages to find support just above the ascending trend line before reversing to climb higher. So take note, once a significant descending trend line or ascending trend line is indeed determined, but take note, it doesn't necessarily mean that price is always going to hit that trend line at the exact point. There can be instances of false breakouts, and there can be instances where price comes very close to the trend line before uh, before stalling. Right now, we've covered ascending trend lines and descending trend lines. We're going to build on this and move on to determining channels. Right, we have upward channels and downward channels. So channels basically are an extension of the descending trend line and the ascending trend line. Now, to draw valid channels, right, we would require at least 4 significant touches, and that comprises of 2 touches at the top and 2 touches at the bottom, right? They do not necessarily need to be in consecutive order, right? You can see here, swing low number 1, swing low number 2, swing high number 1, swing high number 2. Now what we have here is a downward channel, right? Because we can see each subsequent swing high getting lower and each subsequent swing low also getting lower. So in a sense, the channel is tilted downwards. So what we have here is a downward channel or a bearish channel, right? So we'll be looking to see at least 2 touches to the upper trend line of the downward channel and 2 touches to the lower trend line of the downward channel. And take note, the touches do not need to be in consecutive orders, right? They do not necessarily need to be in consecutive orders. You can be, you could even have an instance where price reverses, makes the swing high here at the channel and then drops down to make the swing low, right? This is what we mean. It doesn't need to be at consecutive instances or consecutive orders. Now, over here, we have a nice downward channel as well. We can spot a swing high resistance, point number 1, swing low at point number 2, swing low at point number 3, swing low, swing high at point number 5, and swing low at point number 4. Now we can see here, by the time we hit swing high at point number 4, we already have a valid channel, right? We can see the first swing high resistance at point number 1, swing low at point number 2, third bounce on point number 3. So we already have 3 touches, 1, 2, 3. And then as price rises up, it stalls close to the prior close to this trend line here, and this is where we get the second touch. So now we have 1, 2, 3, 4 touches for this downward channel. So as price is falling down and as price is heading lower and falling down towards the lower trend line of the downward channel, this lower trend line itself can be used in the identification of a potential take profit target for the short trade. Remember, this is a downward channel or a bearish channel. As price makes the bearish reversal of point number 4, we are expecting price to fall lower and fall as close as possible to the lower trend line of the downward channel. And this lower trend line can be used in the identification of a suitable take profit target for the short trade that we have in progress. So take note of how the trend lines itself of the channel can be used as potential take profit targets for the short trade. The lower trend line of the downward channel can be used as a potential in the identification of a potential take profit target. And similarly, the upper trend line of the downward channel alongside maybe a swing high resistance can be used as a suitable identification for a stop loss level. So once again, swing high resistance at point number 4, descending trend line, right, or upper trend line of the downward channel. And if this was a currency pair, right, once again, we would place a stop loss that would be as wide as 10 to 15 pips above the swing high resistance here. Now this is for an upward channel. We see the swing low being formed at point number 1. Then we see a swing high resistance being formed here as well. But we see an ultimate much higher swing high resistance being formed here at point number 3. Then we see a swing low being formed at point number 4. So by this time we have 1, 2, 3 touches, giving us a pretty good indication that we may have a strong bullish channel in place. And then as price makes the bullish reversal of swing low number 4 and starts to climb higher, right, we are able to draw this ascending trend line or the upward channel. And then as price is rising up towards the upper trend line of the upward channel at point number 5, this is where we can identify a suitable take profit target for the long trade that we may have on. Right? So take note, as price bounces off the lower trend line of the upward channel, we can use the prior swing high resistance, or we can use the upper trend line of the upward channel itself in the identification of a potential take profit target for any long trades. Now we're going to combine trend lines and channels with pullbacks and overlaps. Right, so why is that important? Because it enables us to identify bullish and bearish reversal setups. Right, we're looking for trade reversal setups to enable us to play to play the continuation, whether it's a bullish bounce or a bearish reversal. Right, so these are some of the checklists to look out for. Right, is if we have included the Ichimoku cloud in our analysis, when we're going to see if the price action is respecting the Ichimoku cloud, is price action also respecting any trend line? Now remember, this can be an ascending trend line, descending trend line, upward channel, or downward channel. Are there any key horizontal or support resistance levels to be aware of? Are there any Fibonacci levels associated with those support and resistances? Right, this can be retracements, extensions, projections, expansions. And what is the next level where price may end up? Right, we can then use once again the ascending trend lines, descending trend lines, the channels as potential targets. We can also use Fibonacci levels as potential targets. And of course, we can use key horizontal levels, whether they're support or resistances, as potential and targets as well. Now here in this GIF, right, we can see that once the channel has been identified, in this case, this is an upward channel, because we can see each subsequent high getting higher and each subsequent low getting higher. So that's how we can identify a strong upward channel. And once the channel is identified, at least once we have 3 touches for the channel, and we see price makes the swing low at point number 4, that's already our clue to try and capitalize on the upside here, right? As price bounces up, makes a bullish reversal at swing low number 4, we are able to complete the upward channel, and then we try to go long, trying to see that because this is a current ongoing upward momentum, upward channel, right, or upward trend. We're trying to capitalize on the upward trend. and we would place the stop loss slightly below the most recent swing low and the lower trend line of the upward channel. So once again, if this was a currency pair, right, this is the lowest point. We would place our stop loss about 10 to 15 pips below the most recent swing low, which is also accompanied by the lower trend line of the upward channel, and trying to capitalize on the upside as much as possible. And because this is a channel, the potential take profit target can be identified at the most recent swing high that was formed, right? The most significant swing high resistance that was formed at the upper trend line of the upward channel, or it can be identified on the trend line of the channel itself. As you can see here, swing low gets formed here, price rises higher, right? In this case here, price actually comes close to the prior swing high resistance, does not really hit the upper trend line of the channel, right? So you have to take note, right? Just because the channel has been identified, it doesn't necessarily mean that price is always going to reach the upper and lower limits of that channel. Now, this is an upward channel, right? So it doesn't necessarily mean price is always going to rise as high as the upper trend line of the channel, right? And similarly, and conversely, this is also applies to the downward channel. Once the downward channel is identified and determined, it doesn't necessarily mean that price is always going to hit the lower and upper limits of that channel, right? This is something to be aware of as well. Now, in this GIF here, we can see how we can try to play the continuation. And we can see that this continuation involves both sides, right? Whether we're going long or short, right? Once the channel is identified, in this case, this is a downward channel, because we can see each subsequent swing high getting lower, and each subsequent swing low also getting lower, right? Remember, when we have a series of lower highs and lower lows, it identifies a strong downtrend, and in most cases we are able to at least identify a descending trend line, if not a downward channel. And especially once a downward channel is established, we are able to play the continuation within that channel, and that means we have opportunities for a bullish bounce, and we also have opportunities for bearish reversal. And this GIF over here highlights that exactly, right? It illustrates that exactly. As you can see, as price rises up towards the upper trend line of the downward channel, price stalls, takes a little bit of time to make a bearish reversal that enables us to open a short position, and we place the stop loss above the most recent swing high with a buffer of 10 to 15 pips. And then as price extends lower, we're going to be targeting close to the lower trend line of the downward channel as the potential take profit target for the short trade. Similarly, for the bounce, as price bounces off the lower trend line of the downward channel, we're looking to see if it can rise up towards the upper trend line of the downward channel. And with the long position that we may have, we would try to find a suitable take profit target close to the upper trend line of that downward channel. You can see how once the channel is identified, whether it's a downward channel or upward channel, we are able to play that continuation. And by playing the continuation, it means we have opportunities to ride the bounce, and we have also opportunities to play the bearish reversal, whether we are going up or down in that channel. Right? Remember, this also applies to an upward channel, and the continuation can be played the same way. Now, next we're going to move on to the breakout, right? How can we identify potential breakouts? Remember, once price is moving in a downward channel, upward channel, or above an ascending trend line or below a descending trend line, there can be breakouts along the way, and there can also be false breakouts as well. So how do we determine whether this breakout is legitimate or not, right? We are not going going to use the trend lines and channels, but we would also try to incorporate other aspects of our analysis as well. One aspect could be looking at the Ichimoku cloud, right? Did price cross through the Ichimoku cloud, right? Did it cross from above to below or below to above? Has the Ichimoku cloud changed color, signaling a shift in momentum? Did we see price break through any significant trend lines or channels? Did we also see price break through any key horizontal levels? Remember, horizontal levels can be supports and resistances or resistances. And also did price break through key Fibonacci levels as well. All right, now with that, we're going to move on over to the live chart and trading view and do some examples on the dollar index, starting on the daily time frame, right? And you can see I've also incorporated the Fibonacci, the Ichimoku cloud into the chart as well. So for the Ichimoku cloud, right? When price of a particular instrument is trading underneath the red Ichimoku cloud, such as this one we see here from 27th of March, it indicates a very strong bearish momentum, right? And conversely, when price is trading above the green Ichimoku cloud, as what we see from 18th of November last year, this indicates very strong bearish, bullish momentum. Now, similarly, when price crosses through the Ichimoku cloud, right? In this case, what was a strong bullish momentum or upward trend between 18th of November last year and 7th of Feb this year, what was initially a very strong upward trend for the dollar index. We saw momentum fade. We also saw price make a bearish reversal and it falls through the green Ichimoku cloud, right? The crossover point is also another signal that indicates a significant shift in momentum. And then that leads to a series of lower highs, lower lows. And in this case here, we are also able to identify significant channels as well, downward channels and descending trend lines. So in the current context, right, let's just rewind the clock a little bit. Let's rewind the clock a little bit for the dollar index, going back to early June. Now, beginning from end of January, early Feb, we can see a clear series of lower highs, lower lows, right? And that enables us to identify several things, right? We can identify oops, we can identify a descending trend line here, right? First of all, we can identify a descending trend. Remember, for the downtrend, descending trend lines are drawn from the top, and we can see that we have one touch here, 3rd of February, second touch here on 28th of Feb. You can see at this point here in early April, price rises up close to the descending trend line, but doesn't actually hit it. Where it does come very close, once again, is here, 12th of May, right? This is where I would label the third touch, right? Although it doesn't really exactly hit it, but nevertheless, this is where I would still identify it as the third touch, indicating a very significant descending trend line. And this would be the fourth touch here. Now, similarly, before mid-April, by the time we came to end April, there was actually, in fact, a nice downward channel as well, right? I'll show you guys now. Right, there was a very significant downward channel that had been respected all the way till 9th of April. So basically by mid-April, right, this downward channel was in play. And you can see here very clearly between the 31st of January and 9th of April, we can see a very clear downward channel. We can see two clear touches to the top, several clear touches to the bottom, indicating a downward channel and enables us to draw that downward channel. However, we can see price eventually can break out of that downward channel to make a new low, right? Well, although the overall trend was still to the downside, but you can see at this point here, by mid-April, the lower trend line on the downward channel was broken. However, the upper trend line or the original descending trend line was still valid, right? You can see here the lower trend line of the downward channel gets broken, but price still continues to fall lower. We're still in a downward channel or downward momentum, or we're still in a strong downtrend, but the upper trend line continues to remain respected. So basically the upper trend line is the descending trend line, which continues to remain respected all the way till 10th of July, all the way till mid-July. So we can see here the descending trend line was respected several times. We see the first touch here in in early Feb, second touch in March, third in May, fourth in end of May, fifth in at the end of June. So you see 5 clear touches, right? And this highlights a significant uh, descending trend line. and we saw a bullish breakout materialize on 11th of July, right? This is how we can see, right, on the higher time frames, how we look at Ichimoku cloud, how we try to identify a series of lower highs, lower lows, helps us to identify a very nice descending trend line, very nice downward channel, right? Well, let's put back some of the channels. Right, we had an initial channel here. Right, we had an initial channel here. And of course, it breaks lower here. And then, but the descending trend line was respected all the way till middle of July. Now, if we look at the euro, we're going to be able to identify ascending trend lines and channels, right? We can see very clear upward movement from early February, right? We can see a series of higher lows, higher highs. Price is also trading above the green Ichimoku cloud, all factors highlighting the strong upward momentum, highlighting the strong bullish momentum. Right, so first of all, we can also draw one ascending trend line here, right? This is not the strongest ascending trend line, right? As you guys should know by now, there's only two touches, right? But it's an ascending trend line to keep an eye on. Now, what is a little bit more significant is this second ascending trend line, where we can see several touches here. First one taking place at the end of March, second in mid-May, third at the end of May, and the most recent one, of course, in mid-July. Right, so there are two ascending trend lines to be aware of. And of course, the more significant ascending trend line is the one that begins from the end of March. Now, from the end of March, we are also able to draw a channel, right? We are also able to identify and draw a channel as well. Right, what we have here is the formation of a bullish upward channel. And in fact, I think there's another channel within this area that we can identify as well, right? We have another channel here as well. So you can see here, it is not uncommon to identify a bullish channel within a larger channel as well. And conversely, it also applies to the downward channels as well. This may not always be the case, but it is not uncommon either. Right, okay, so now we've identified the channels. Now we're going to see how we can incorporate all of this with identifying support levels, key horizontal levels, which then help us determine supports, resistances, and how we can apply channels to help us to try and continue to ride the upward momentum, playing the continuation, and also where we can see a potential breakout as well. Now, when we look at the euro on the daily time frame here, let me right size the chart. How do we do that? We right size the chart on any time frame by right clicking the y-axis and the x-axis, right? The price chart, the price label, the price axis, and the date axis. Now, we can spot a significant swing high resistance being formed at the beginning of July, right at 1.1820. We can also spot a very significant swing low in mid-July, and this is also a level that intersects well with the swing high resistance on 12th of June and then again on 21st of April. So what we have here is a very significant horizontal level, and in this case, this is an overlap. This level previously served as a multi-swing high resistance all the way till 19th of June. This level sits at 1.1600, and then in mid-July, it served as support, and as the euro bounced off this level, it then is formed as an overlap. And we have a swing high resistance here in early July, identifying a potential resistance barrier. So that means the first support for the euro on the daily time frame sits at this overlap, which is at 1.1572. And very likely, first resistance is going to be sitting at the swing high resistance that was formed at 1.1806. Now, in terms of the second support, right, I can spot a nice overlap here as well at about 1.1450. I can spot a nice overlap as well. Why is that the case? We have resistance here in early June, and then we have support here at the end of June. Another nice overlap at 1.1449, which we can label as the second support. Now, on this uptrend, there are several Fibonacci retracements that we can draw. Right? The most recent one we can draw is from this swing low, 12th of May, going up to the swing high on the 1st of July, looking at all the fibs. We can see we have the 38 and 50% retracements aligning very well with the first and second supports respectively. Right, and also as many of you would have noticed as well, right, we have a nice upward channel here, and we also have a somewhat of a subset of the upward channel over here as well, right? Now, with the euro pulling back, today, and should we see a much deeper pullback materialize over the next couple of days, right? We could, and if it does stabilize at the lower trend line of the channel once again, which is basically around this region, right? If it can stabilize here, we've got a potential opportunity to play the continuation and play a bullish reversal, right? Opportunity to play the bullish reversal. Should we see the euro fall back towards the red circle, stabilize here, make a bullish reversal to climb higher, gives us an opportunity to play the continuation. Now in resistance, right, although I identified the swing high here on early July, let's zoom out and see why the last time the euro was trading around 1.1800. And when we look at the chart for the euro back in July and September of 2021, which was nearly 4 years ago, right? This was where the euro was last trading. So the euro has hit 4-year highs. So first resistance clearly is the swing high formed in early July at 1.1800. And the second resistance is this multi-swing high resistance at 1.1890, right? Very clear multi-swing high resistance. First swing high formed in July of 2021. Second swing high being formed in early September 2021. This is where we can label the second resistance, a multi-swing high level at 1.1892, which has been in place since September 2021. And first resistance is simply going to be the swing high that was formed right at the beginning of July. So that means if we do see the euro fall towards the lower trend line of the upward channel once again, and if we can stabilize here, we've got an opportunity to go long. And should that bullish reversal materialize, we can use several resistances in the identification of the take profit target. Right, we can use the swing high resistance at 1.1810, right? The first resistance basically as a potential take profit target. We can also use the second resistance at 1.1892, a multi-swing high level, as another potential take profit target for the long trade. And of course, should we see the euro climb even higher, we can then use the upper trend line of the upward channel as another potential take profit target as well. Right, so this is how we can use ascending trend lines, upward channels, swing high resistances, overlaps to identify key support and resistance levels, and also incorporate Fibonacci analysis into the Fibonacci retracements into the analysis. Now, on this downtrend here, that begins from 1st of July, ending on 17th of July, we can run a retracement on this downtrend. The purpose of this retracement is to look for key extension levels which sit at 127 and 161%. Now we can see the extension at 127% aligns very well with the second resistance, and we can also see that the extension at 161% also intersects with the upper trend line of the upward channel at around 200, right? Or $1.20 here, or €1.20. So basically, we can see that this intersection is also another potential target that we may include should we see the euro continue to climb higher. So you can see here very nicely how we've used trend lines, channels, key horizontal levels, swing high resistances, overlap supports, and how we've also incorporated Fibonacci retracements and Fibonacci extensions to help us identify potential resistances, which in turn can be used as potential price targets for long trades as well. Right, now let's move on over to something with a downward channel, right? Apart from dollar index, right? We can see dollar franc has also made a clear series of lower highs, lower lows. This currency pair also continues to trade underneath the red Ichimoku cloud, all of which highlighting a strong downward momentum. Now, I can also spot a pretty significant descending trend line here. Right, this is a pretty significant descending trend line. And in fact, this was actually a pretty decent downward channel as well. If you look at it, right, up till 3rd of April, right, this was a pretty significant downward channel for dollar franc. Now, beginning from 12th of May, we can also spot another clear downtrend as well, a clear series of lower highs, lower lows, right? Very clearly, we can spot a very significant descending trend line, and we can also spot a very clear downward channel as well, right? In fact, this downward channel was actually broken. You can see a very clear downward channel all the way till 25th of June. The channel gets broken, returns to the channel, hits the upper trend line once again, and continues to drop lower. So we can still use the lower trend line of the downward channel as a potential take profit target should we see the dollar franc continue to slide lower, right? And at the same time, we can probably, okay, no, that's fine. We can also try to identify a prior support as well. Of course, this is a significant swing low. This is a significant swing low that was formed in early July at around 78.96. And this is probably a level that we can use along with the lower trend line of the channel for a potential exit point as well. Now, looking at this level at 78.71, let's see when was the last time the euro was trading around this level, the dollar franc was trading around this level. Looks like we're going to have to switch into the weekly time frame. And we can see here the last time dollar franc was trading around 79.20, was back all the way in September of 2011. So you can see here dollar franc has hit 14-year lows, right? This is a 14-year low for the dollar franc. Now let's look at this part of the chart in the daily time frame. For now, you can see we are on the weekly time frame, but this is between June and September of 2011. So let's go back and see. Let's jump back in time. Right, we can see here, and we can see pretty decent support being formed at around 78.50 between 19th of August and 6th of September 2011. So this is where we can identify the first major support for dollar franc. And we can also spot a very significant swing low being formed here in August of 2011. So this is where we can label the second major support. Now we can get rid of that box here and come back and take a look at where dollar franc is currently trading. So you can see here, as dollar franc fell rapidly at the end of June, it managed to stabilize just above the first support, which is at 78.54. So now with dollar franc looking to fall lower, right after running into resistance last Friday, 18th of July, we can target, if anyone who is short on dollar franc after making a bearish reversal on 18th of July, right? We can identify a suitable take profit target for the short trade that begins from a target zone that begins from 79.05 all the way down to 78.60, right? So about a 40 pip range here, which we can use as a potential target for any short trades that you may have for dollar franc. And you can see here the intersection. And also we can also, of course, use the intersection of the first support, which is a multi-swing low level, and the lower trend line of the original channel as well as a potential target to exit. Now we can also use Fibonacci projections as well and Fibonacci extensions to identify potential targets as well, right? We can see there's an uptrend that begins from this swing low on 1st of July, ending here on 17th of July. The purpose of running this retracement is to look for key extension levels, which sit at 127 and 161%. These extension levels can also be used as potential price targets for short trades as well. Now, there's also a nice zigzag pattern that I can spot beginning from 19th of June, 1st of July, 17th of July, and then currently now in progress. We can, on this zigzag pattern, we can try to run a Fibonacci projection. Now, the projection involves 3 points. So we start point 1, 19th of June, point 2, 1st July, and point 3, 17th of July. Now, key projection levels sit at 61.8%, 78.6%, and 100%. And now what we can see here, as we zoom in, what we can see in the projection levels, right? Remember, key projection levels are 61.8%, 78.6%, and 100%. And when we can see the 61.8% Fibonacci projection aligns very well with the first support, which also intersects with the lower trend line of that downward channel, right? So pretty strong support area here. Now we can also see that the projection at 70.6% sits quite close enough to the extension at 127%, identifying another strong support zone here, which in turn can be used as a potential target for any short trades on dollar franc. And of course, we have another support zone identified by the extension at 161% and the projection at 100%, right? Another potential target here as well. So you can see how the combination of prior swing lows, prior overlaps, the lower trend line of the downward channel, as well as Fibonacci projections and Fibonacci extensions help us identify potential price targets for the short trade on dollar franc, right? As we can see here, the downward momentum continues to be strong. The descending trend line continues to be respected. The downward channel got broken here. Nevertheless, we can still use the original downward channel as a guide as well to see how far price can probably drop as well. Right. Okay, so that brings us to the end of today's session, right? Once again, thanks for tuning in into series 2 of trend line support and resistances, where we covered trend lines, ascending trend lines, descending trend lines, as well as channels, upward channels, downward channels. And we incorporated all of this with Fibonacci analysis, including Fibonacci retracements, Fibonacci projections, Fibonacci extensions, as well as identifying key horizontal levels, be it swing high resistances, swing low supports, overlap resistances, as well as overlap supports. All right, that's all I've got for today. Thanks everyone for tuning in to today's session brought to you by Vantage. We'll look out for all upcoming webinars as well, beginning next week, Monday. And I wish you all the best in your trading journey and looking forward to catching all of you at the next session. All right, thanks everyone. Take care and have a great trading week.